Hey, good morning, everybody. Today is Friday, March 13th, 2015. My name is Cliff Backus. I'm the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. Yesterday was a good day for the bulls as stocks pushed higher across the board. Trading volume was uninspired for such a significant move. Small caps outperformed large and have since our 1 to 6 month timing model went to a buy signal back on February 6th. What we're looking at here is the bull market going all the way back to March of 2009. The bull market actually started on March 10th, 2009 and is now the longest running bull market in history. We're looking at the Russell 2000, and I wanted to point out that back in 2011, 2012, we saw this formation out of the Russell 2000 before it went on to make this move higher. This formation looks very similar to what we're looking at in the Russell 2000 today. Let's zoom in a little bit closer. This is that same formation going back to the beginning of the formation in March of 2014. Notice how we pulled back. We found resistance in the 1213 area. We broke above that level, created minor resistance in the 1222 area, went up, created a high in the 1243 area, pulled back, tested our 50-day moving average, but didn't undercut it right here. And now we're moving back higher. I don't know if this formation will lead to another significant uptrend in the Russell 2000, but it's worth keeping an eye on. Small caps are outperforming large caps at this point, and it's entirely possible that we are into a new fairly significant long-term bull run. In the short term, let's take a look at the NASDAQ Composite. What we're looking at here is a weekly chart of the NASDAQ Composite going back to February of 2014. In the end of February, beginning of March, the NASDAQ put in a high and then pulled back and made this base. When it broke above that high, or broke out of this base, it went on and then came back, retested the base, undercut it by a little bit before going on to make a new high. We then made this new high in September of 2014, based, broke out of that base in October of 2014, went on to make a new high, came back, retested that base, undercut it by a little bit before going on to make this new high. Now we appear to be coming back to retest this high, and I would expect that this market will undercut this high by a little bit before going on to make a significant new high. Let's zoom in a little bit closer. Now we're looking at a daily chart of the NASDAQ Composite, and this is the recent high that we put in. I would expect that we see this market continue to test this support area and possibly undercut it before going on to make significant new highs. Zooming in a little bit more. Yesterday, the NASDAQ Composite had a pretty good day. We were up 43.35 points, 0.89%. The NASDAQ closed at the top of its daily range. Trading volume was a little bit higher than the prior day. It was about average, giving us another accumulation day. Right now, the NASDAQ Composite is in a confirmed uptrend, but that uptrend is under pressure. We've seen quite a bit of distribution in the market in the past 2 weeks. Over that same period of time, we've only had 2 days of accumulation, including yesterday. And so the market's getting a little bit squirrely here. And we are on our 1 to 6 month timing model showing a market in transition. Right now, the NASDAQ is bracketed by support in the 4811 area and resistance in the 5009 range. Let's take a quick look at the MACD histogram on the NASDAQ, and we see that the MACD yesterday closed below the zero line, which is bearish. However, yesterday the MACD started to form a little bit of an uptrend. So because we have a bearish signal and a bullish signal, our immediate outlook on the NASDAQ is neutral. Let's take a look at the S&P 500. The S&P yesterday also had a very good day. The S&P was up 25.71 points, or 1.26%. It also closed at the very top of its daily trading range. Trading volume was just a shade below where it was the day before, and so we did not pick up an accumulation day on the S&P. S&P went into a confirmed uptrend back on January 8th. That uptrend is currently under pressure. The S&P also has had a lot of distribution in the past 2 weeks. And on the S&P, we haven't seen an accumulation day in the past 2 weeks. So the market is weakening here. Whether we've seen the lows or not, I don't know. Right now, we are on a don't buy signal on our 1 to 6 month timing model. The S&P 500 is bracketed by support down here in the 1992 area and resistance up here in the 2094 area. Taking a look at our histogram on the S&P 500, we see that, like the NASDAQ, the S&P is trading below the zero line, but is beginning to develop a little bit of an uptrend. Trading below the zero line is bearish, the uptrend is bullish, and so our immediate bias on the S&P 500 is neutral. That's about all I have for today. If you want to talk about the markets or any of our trading strategies, please feel free to give us a call, drop us an email, or if you'd prefer, make an appointment. Come by the office, see what we're up to. If you're out of the area, we can set up a Skype session. See my contact information on the homepage. If you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily market review. Have a safe and profitable day. Keep your stops in place, and we'll see you again on Monday. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.